let's take a look at the bigger picture. So here I was just playing with some ranges, price projections and stuff, but let's focus on the last month, monthly balance. We did dip below but came back, so for now no material change happened, but there is a little bit nuance to that. I'll explain it a bit later. On a weekly, similar story. Third week, one time framing down, quite big ranges, and this week already biggest out of few previous. On the daily, let's just review all my charts. I don't necessarily use all of them. So here also we have similar situation, but one time framing is only for 2 days. Here also volume is picking up on the move to the downside, so this is kind of negative. We are now below 200 MA, and we are reaching 8-10% correction, which is my downside target for March OPEX. I wonder if we get there and if we stay there until the OPEX, like similar to COVID. But this might be getting crowded trade, I'm not sure. Well, we'll see. And here, I don't usually look at the RSI, but we are reaching oversold regions. Let's just take a look at our previous instances when we dipped lower. So it was a low or around low here, probably around low here. Here it was a low, and here it was around the first low. We bounced soon, and here we did diverge. So yeah, let's take a look at OPEX. So we are now below. Let's take a look. So we are now below first standard deviation, and the ranges are tightening a bit around 5700. So, or here it is more spread. So first we had this area, and then now it is much lower, and for the month, for the OPEX, it is this gray line. I don't like the visibility of that. I might change it a bit, but anyhow, let's get to the chart here. So SPX did look below this recent low, but they didn't break the November lows. And if we look at the ES, I'll get rid of the view ups maybe. So depending on the calculations, so now you can see that we are here below all of those lows. But if I change the method of calculation, like here is volume-based rollover and it is back adjusted. If I use only volume-based rollover, it will look differently. So similar to SPX maybe, or even slightly different, but here we see that this low wasn't breached. Those two lows are matching and it is not breached. So, and if you use different types of rollovers or not, it is going to look differently. So I'm not that fond of big levels in the past, because there are some major differences similar to all-time highs. Like here on SPX we did make all-time high. Now on some other charts, like on the Thinkorswim platform, we didn't. On the SPICE we did get higher 3 times, and we didn't break those lows. So yeah, some differences on the way, so I don't trust those big references that much. But yeah, so let's focus on what happened yesterday. So we opened with a small gap to the upside, to the downside. We filled it and we traded lower, and we traded lower quite a bit. We got stretched almost 100 points, like 80 or so, and then we traded higher. And in the C period, when we filled the single prints and then D period started printing, I thought that there is a big chance that we might revisit those levels. So getting long in here with small size would be prudent, I think, but also it's hard to get. Halfback was also here, so the sellers were shorting halfback. This might have been a good short also, to be honest. Maybe even better, because it would be with the flow of the market, but exiting would be harder. And here I'm not sure, I'm not a big fan of getting long that early, but it would work out great. And later I wasn't available, so I'm not sure if it was news related or what, but we traded much higher. We squeezed back through the saddle. We revisited overnight point of control, and here we didn't close the singles, so it is another overnight high that isn't revisited. And we have spike base here, which is also tempting target if we get higher. Later we have this high low pivot. Yeah, so I'm not sure about shorting here. Maybe an exit would be, well, I don't know where, so yeah, it's tough. But we were getting stretched, so it was like, what, 130 points, so maybe, and we weren't making single prints, so here was high low, here was high low, so maybe it was a short around overnight point of control when we make high and we couldn't, so, or maybe even when the M period started, I don't know. And then when we traded lower, I'm not sure if that late in the day it was okay, but I would like to enter long on this price lower number of TPOs, so tighter range here when you count the TPOs. Yeah, and in the overnight here was a decent short. I didn't take it also, because here is also same situation, right? So anyhow, we get to the overnight, and we are in a very tight range above saddle and below that small bulge that we printed. We are hovering just around previous week lows. So what can we expect happening today? We are going to open inside value, so that is less directional, probably less volatile. We might chop a bit, and I also wanted I had a trade, a volatility trade here. I bought a straddle, a slightly wider one, but I almost got paid here, but I was too greedy. I ended up putting too high price for my puts, but it would be a nice trade, so it would be like over 100% of the on the profit on the puts, and then if buying calls here, then they would have paid a lot. So I ended up losing, but the idea was great, and I'm not sure if here is going to be the same, because now we are going to open within previous day's range, so we might chop, but given that much volatility that we are experiencing, it still might work. So yeah, I'm considering buying a straddle for something like that, those prices. So let's think of what can happen today. So overnight inventory is slightly long, and we might see some correction. So if we open around that area, we might see, well, if this is a trend line or so, we might see flashing of those lows, and we might trade a bit lower, maybe finding support around point of control, either this or this, and I would like to get long maybe around this area. So it's quite a lot, so hard to get long early on. Better to rely on some structure. Maybe this bulge of volume that we printed here would be decent. So as you can see, there are some areas that makes it harder for a stop. So maybe if we get here, clear this level, and then on the way up and with a tighter stop, same here, so some small stop attempts, because the upside is quite big, and similarly maybe even easier in the opposite direction. So if we clear overnight highs, there is possible short. If we get higher and fail, if we get to single prints, also another one, and around highs another one, so we can revisit point of control, settle, and so on. And unless we single print or break out of previous day's range, so this might be some, again, wild stuff. Let me just zoom out a bit. So if we break out, well, to the downside, there are some references, but I'm not relying on them that much. So let's maybe focus on the upside. If we get higher, this might be a good long opportunity to try to enter long after the break. I'm not sure about tightness of the stops, because with such volatility it's going to be hard, but first we can fill those singles, and here, well, it might be a good short, but if the initial move is strong, it is going to be hard. To contrast that, we had strong move early on yesterday and we didn't break IB low, so we might be getting too much, too stretched. So tough session ahead of us. Here is first resistance, and we might find some sellers there. Then there is this zone that we might reject also, and more or less final zone would be, final boss, let's say, would be this zone. Here are some poor highs which might be cleared or not, and then we might roll over again. So yeah, I would most likely rely on the structure to go with trend trades, but I don't like playing trend trades early on.